Well, hello everybody. It's been since Sunday. We're like $2,000 higher than we were on the Sunday. But boy, did we sweep the lows today. And another big orchestrated manipulation pushed the price down. And I'm trying to find out why, because it's sure spiked back up. It looks like around 72,500 was the bottom. There's a couple of other things that are kind of scary to look at. We did hit a 40% drawdown. And as I said for years, 20% drawdown in a traditional market is considered a bear market. In crypto, it's 40%. We hit 40%. So you could say, yes, we are confirmed now in a bear market. I was 60 to 70% sure a few weeks ago. Now it looks like we hit the bear. But did we hit the bottom? That's what I'm going to try to figure out today. And remember, this game is very tricky, but I'm going to share more data with you than you will find anywhere else to see if we can pin our very last hope to something that sounds like pin. It's PMI, and we'll break it all down. This is called the deepest drawdown, not financial advice. Big thank you to everyone on Patreon too. From Jeff Hart, everyone join his Patreon. Thanks, Jeff. Appreciate you. Let's get into the ugly and warning. There's lots of ugly news and bad news today. First of all, the last 7 days has been rough against Bitcoin. You can see ETH got hit hard, fell 6% more than Bitcoin fell. In fact, Bitcoin fell a lot. You can see we're down 14% for the week for Bitcoin. A big hit, down to 76,100 after hitting 72.5 today. 70K kind of was the expected historic floor, kind of close to the previous all-time high from the previous bull market and the November 4th election date 2024. 69K, 70K, give or take $1,000. That should be a floor. But did we get close and then bounce? That's what I'm going to try and figure out today. Now, all the stuff is dispersed across different areas. ETH daily ETF flows were negative, but the other ones were kind of okay, which is not bad. And because there's good news and bad news spread all over, it's just all coming all at once. Another area of concern and ugly news is Oracle free cash flow is tanking. This is tied into the AI bet. I do have a stock section at the end, an AI of the video under the good news, but this is the ugly news. So it comes in from Milk Road. Free cash flow since November 2021, $13 billion last quarter, before and zero before that. And this is a company for 30 or 35 years has managed free cash flow explicitly well, and all of a sudden they're bleeding out because they have to invest a lot to get a lot, and they've got lease contracts from many big players, mostly OpenAI, of $250 billion. The question is, will they have the capex in place, and will the piper pay, or whatever they say? Is OpenAI going to be there to pay the big checks to Oracle when the time comes? Anyway, let's get into the bad news. Fear and greed for crypto is 17. Extreme fear, and rightly so this time around. And Bitcoin for the month is down again. We've had 5 red months so far. October was supposed to be Uptober. Didn't happen. November, blood red, 17% down. December, down. January, down. Feb, down so far. But it could turn around. The percentage it is down is only 2.8%. It feels a lot worse than it is, but we'll see where we go from here. Now, flows by asset last week. Again, another red week. They dropped $1.7 billion a week, the outflows. And again, year-to-date flows now are down $1 billion. That is also not good. That is the biggest fall as well in quite some time in AUM. When we look at flows by asset last week, messy across the board. 1.3 billion out of Bitcoin, 308 million out of ETH, 43 million out of XRP, 31 million out of Solana. Everything bled out, and people piled into short Bitcoin, which means they're very bearish. And Chainlink had 500,000 plus in. All over the place. AltSeason, nope. Still, Bitcoin is in control, and everything else is bleeding out. Also, MicroStrategy is getting close to not making a profit on their Bitcoin buys. You can see their average cost actually fell under their average cost today. The average cost for Bitcoin is 75K. When it hit to 73K today, they were losing $2,000 per Bitcoin over 710,000 Bitcoin. That's a big loss. So MicroStrategy is getting hurt. But going by the chart, I still think they're ATMing, but they're ATMing at a discount to the net asset value, which is not a good thing to do in my opinion. I don't like that. Anyway, that's MicroStrategy. And the last piece of bad news is 22% of Bitcoin holders are now in loss. This is the unrealized profit and loss, and it just hit 22%. And that's triple since January. And this is an important number to look at because it kind of tells you that, yeah, we're stepping into a bear, but could there be less drawdowns than in the past? And that's the thing we need to figure out as well. But typically, when we do get to this level, it means we're getting sometimes close to the bottom. I have another chart to show you on this too. Now let's get to the good news. Again, it's all over the place today. Good news is yesterday, the ETF flows were positive. Bitcoin sucked in $562 million. That's the biggest buy we've had for quite some time, for nearly a month. So we'll take it, a visual view of what that looks like. Boom, big green compared to a lot of red over the previous couple of weeks or months. And Solana had a nasty red day, but it was followed up by a green day. That was their worst day ever, by the way, 2 days ago. That would have been last Friday, by the way, because this is yesterday's data. That we don't have today's data because the market's just closed. And if we look at crypto over the last 90 days, it has been very painful indeed. If you look at all these names on the far right, ICP down 57%, Ondo 56%, Tau 52%, Hedera 50%, Aster 50%, Cardano 48%, Sui 46%. It's just really bad out there. The winners for the last 90 days are PaxG and XAUT, which are both gold proxy kind of crypto names. They both did very well. Bitcoin down 28.3% over the last 90 days. That is a pretty bad hit. ETH down 36.4%, and on and on and on. So it has been a rough time out there in crypto land. Now, let's get into some of the on-chain charts to see if there are any glimmers of hope or not. Now, this is a Bitcoin gold chart, and I know Bitcoin and gold have gone completely separate directions, but for only the 5th time in history has this Bitcoin gold bounced off the purple RSI level at the bottom there. Doesn't mean anything. I don't know. It's only happened 5 times in nearly 15 years of history. And typically it happens at absolute bear market bottoms. If you can pin any hope to this, this says, if gold holds, Bitcoin should go up from here. If not, it's completely broken. But I don't pin a lot of that because gold is a different animal. And then we have Bitcoin versus global M2, absolutely broken down like never before. This should follow, but we're going to come across a story which shows you exactly what has happened this run. This run has been masked in disguise. We'll come to that in a second. Another piece of maybe good bottoming news is SOPR. It just hit 1.13, still above 1. When SOPR falls below 1, that means we are getting into the actual bear market territory. We're not there yet. Remember, we didn't have a bull market in the traditional sense, and we might not have a bear market in the traditional sense. So this 40% off could be interesting to look at. Anyway, if you look back here as well, you can see in 2019 and 2023, we saw crazy capitulations where 40 to 60% of the supply are underwater. But because the ETFs are in play here and the digital assets, the treasury companies, it's a little bit different because when the Bitcoin goes into those assets, it doesn't come out. It's not really freely available for sale like a typical retail holder. And another interesting angle is the days between all-time highs. Today, again, we hit that very low number, but it's been a long time since we've been at an all-time high, and this kind of resets the clock every time it does it. But we'll see. What is interesting is the number of all-time highs per year. In 2010, we had 11. 2011, we had 28. 2013, 35 of them. 2017, 67. 2020, only 11. 2021, we had 23. 2024, 21. And 2025, only 12. So you can clearly see that Bitcoin completely ran out of steam in 2025, and it was not a traditional 4-year cycle. In fact, the 4-year cycle is dead, which we all know. And it's been 120 days since we had the last all-time high, and we can construe a number of things from that. But we'll get to that in a second. Now, one other thing, which is probably kind of important, and I put this chart together, going back again 15 years. This is the PMI. This is the measure of industrial activity. And typically, when there is large industrial investments, people go risk on. They invest into risky assets, things like disruptive stocks, NASDAQ stocks, and Bitcoin. And here, although I'll step out for this, every other historical correlation broke down for Bitcoin over the last 2 years. Every single one. The 4-year cycle, the correlation with gold, the correlation with NASDAQ, the correlation with global M2, all broken. Every single one. This is the last one we can pin our hopes and dreams to. Just want to share that and walk you through the history. So if we break this down, this PMI is our last stand. If we go back to 2012, 2013, that's when the PMI broke through 50, the red line I have here on the chart, and Bitcoin shot up. Next time we broke through 50 was early 2016, and Bitcoin shot up. The next time we broke through 50 was after C19, around June, July 2020. Bitcoin went to the moon. Since then, PMI has been in a recession. It sucked until it broke through yesterday. A record climb over 5 percentage points from 48 to nearly 53. Boom. Now, people argue. Sometimes they say, well, Bitcoin bottoms before PMI bottoms or before PMI breaks through 50, etc. When I look back at this, it all happens within 2 weeks. So if this holds, going back 14 years, 15 years, if this holds, this could be a good omen for Bitcoin, but we don't know if this time is different. Maybe it's like gold, maybe it's like global money, maybe it's like all that other good stuff. We shall see. Anyway, watch this carefully because other people watch this as well. And they may have taken this as a signal to go in today to buy Bitcoin. It'll be interesting for me to see what the ETFs do tonight as well. I'll post that on Patreon. Now, we do have that 40% off. This is the biggest drawdown of this cycle since we emerged from the bear late 2022. And there's been some corrections along the way, but nothing this deep. We had the tariff tantrums, which took us down to 75K, but we're deeper. We hit 73 this time around. So what happens next? We are not sure, but as I said yesterday on DCA, if you have no Bitcoin, this level is not bad for starting a position. The upside is larger than the downside from here. And to back me up on that too, we have Matt Hogan, the CIO of Bitwise. He says, a full-blown crypto winter has been masked by institutional flows now nearer the end than the beginning. So basically, what he says is, the crypto winter was brutal, but we didn't notice it because the flows into the ETFs and into things like MicroStrategy were so high, we didn't feel the true pain of the huge amount of dumpage by the long-term holders. This was the thing that tricked a lot of people, including Bitwise chief investment officer, saying, now we see what happened. It was a brutal crypto winter already. We saw we had no AltSeason whatsoever. It was a complete waste of a year for 2025. And Bitcoin got hammered, but it was masked because we didn't understand how bad it was behind the scenes. And I said this years ago, I said if MicroStrategy was not there and the ETFs weren't there, we'd probably be around $42,000 now. And that's where we are. So they have helped the space, but they've also masked the damage that was done this winter. This time, everything is different. And that's another proof point of that. Now, another interesting angle regarding timelines, if it is the same, is from Lei. The average days of bear market 2015, is 410 days, 2017, 2018, 365 days on the nose, 1 year exactly. 2021 to 2022, 330 days. Of course, these can be slightly different from where you measure, but it's been 120 days since the Bitcoin all-time high this cycle. Now, if you ask me, it says here in this tweet, you got 250 days to go. That assumes an average of history. But I interpreted that the bear market duration will be shorter than the previous ones because 410, 365, 330, you basically knock off 35 days, 25 days each time around, and that leaves us 180 days to go, which is 6 months. If we are in a bear market, we're 40% off. That is bear market territory for sure. But how fast will the recovery be? And I'll say again for the 1,000th time, that is a function of the money coming into the space. If retail, like me, comes out and buys today, and the ETFs buy, and the institutions start stacking, they find money somewhere, it's a good time to buy. That's very clear. The question is the money there to do the buying, or are they off in something else like gold or silver or AI stocks, etc.? So that is the Bitcoin story today. Very interesting. We are still in a very manipulated environment. It's, we're on a boat, on a bus, and we're not in control of exactly what's happening. But either way, Bitcoin's at 76,300 as we speak. And today it went as low as exactly 72,600, 72,800, depending on the exchange. By the way, the spreads on the exchanges today were all over the place. Kraken, Coinbase, Bitstamp, CRO, Crypto.com. It was just amazing. And the fees that they charge to buy, unreal. Anyway, moving on to other crypto news. This is, shout out to Vitalik Buterin from Ethereum. He wrote a detailed paper why he actually criticized the L2s pretty heavily, which I thought was interesting. And for years, if you know me, I always called layer 2s on Ethereum a Bandaid for the Ethereum layer 1. They were never going to be a permanent fix. They were always centralized. They were always convoluted to use, expensive to use. People had to bridge between back and forth and everything else. But this is a quick summary of what Vitalik said. And he said the biggest reason L2s are criticized is they shatter the ecosystem. Instead of one Ethereum, we now have dozens of silos like Arbitrum, Base, and Optimism. And this forces users to constantly move money across bridges, which is slow, expensive, and risky. Also, security theater, it's not real. Layer 2s market themselves as being as secure as Ethereum, but that's complete BS. Most layer 2s are stage 0 or stage 1 of decentralization, which means they are controlled by a single group of one validator or one person or one couple of signatories, etc. And he said if layer 2s won't give up control for regulatory or technical reasons, they aren't scaling Ethereum. Very important. So I'm very glad he was very big on decentralization. So important. And he said layer 1 is the only way. By the way, that's the same thing that Toly said for years at Solana. He said layer 2s are starting to look unnecessary because Ethereum's main layer is getting faster and cheaper on its own. And in short, as I said, they were a Band-Aid 5 years ago, slow network, and now that network is beginning to be fixed. Now, I have also been tracking the TPS for Ethereum. It was 12, and then went to 15. Now it's running at 30 transactions per second. And they had record number of transactions as well on the chain. So people are beginning to directly transact on Ethereum itself, no longer using the L2s. And for the umpteenth time, I will share from the SCP profiler the actual live data from the last 24 hours across the different chains. You can see here, if you add up Ethereum and all the layer 2s that matter, you can see the number of transactions over 151 million for Solana. And you can aggregate all of the rest for ETH and all the layer 2s. Doesn't come remotely close. Same thing with users. Nearly 6 million active users on Solana. And the highest number of users on Ethereum is now on the base layer 1, 833,000, which is awesome. Nearly a new all-time high, at least for a very long time. So very refreshing for Vitalik to say that, and that's good for the space because nobody wants to deal with the layer 2 user experience. Anyhow, let's move on. Stocks, fear and greed, 43, which is much higher than crypto. And stocks were mixed. Some up 4%, some up down 4%. Apple up 4%, Nvidia down 4%, Amazon basically flat, Tesla down 4%, Microsoft down 14%, Google up 1%, Meta up 2%, Broadcom down 4%. It's so weird. Is that every week I come back, everything's either up 4% or down 3%, or all across the board. They all match for some reason. I don't know why that is, but it has been a bumpy week. A lot of nerves out there with the Fed and macro and tariffs and all that stuff. But there are some bright spots. This is Circle and USDC. Shout out to Artemis for this chart. But the crazy news here is the sheer volume that's been conducted on Circle, on Solana for USDC, hit a record amount, nearly 10 trillion in the month of January. And again, if you look at that and compare that to about 2 trillion for Tether, it's a lot lower. So transaction volume is coming to stable coins, which is good. And when it comes to transacting a lot, high frequency, low dollar volumes, etc., all of the action now is happening on USDC and Circle, not Tron and Tether, which was in the past. And I'm hoping this will continue, and this will be good for Circle, the stock, as well. Now, a little bit of cybercab, robotaxi news. This is from Sawyer Merritt. Tesla plans to warn the Senate Commerce Committee tomorrow that China will be dominant manufacturer of transportation for the 21st century unless the US government gets its butt in gear and changes regulations around autonomous vehicles. Absolutely critical. I've been crying from the rooftops now for years too about how AI will be won by the country with the most energy and the most compute, and that could be China. So we could all be under the Chinese thumb without knowing it, unless something changes. But there are players in the country that hopefully that will happen. Now, other good news too is Waymo valuation. I do believe Waymo is guaranteed to fail. I can't see it working. It's too expensive. It's a magical party trick. Who knows? Maybe they can do something. But with Tesla around, I don't see it happening. But that being said, it didn't stop VCs from nearly tripling the valuation in a year to $126 billion, and they raised $16 billion, which is massive. And they want to expand in other cities. But again, their cars cost hundreds of thousands of dollars to make, and their fees are very high, and they have no line of sight to profitability, and they can't scale, and there's too many fingers in the pie, and it's not end-to-end neural networks, true AI. It's just not going to work. So anyway, as we see more companies throwing good money after bad, don't ever do that in investing. Also, XAI and X and SpaceX, all are now one big happy family, a big vertically integrated system combining real-time news from the planet, the world's town hall, the best AI many consider with Grok and space rockets and Starlink and communications. It's going to be a huge, very important organization. And I did tweet something yesterday that I thought maybe the reason for XAI rolling under SpaceX would be to protect it from Orwellian governments, but that didn't stop them, because the day after it happened, there was a huge orchestrated attack on freedom of speech. France, UK, and Spain all took coordinated actions against Elon Musk and X today, talking stuff like deep fakes and bad narratives and all that type of stuff. It's funny they don't go after other players. Anyway, hopefully free speech will prevail, but definitely the leaders across Europe do not like free speech. If you're watching this channel and you do not like free speech, you probably shouldn't be watching this channel. That is the number one way to kill a democracy. First thing you do is you cancel freedom of speech. You let your government leaders control the narrative. That's what they want, and that's very bad. I'm probably going to get pushed out of Google for this. Anyway, but, who cares? Who cares at this stage of the day? I was so busy today with trading and other stuff. I didn't put together a meme du jour. Sorry about that. But all these videos are turned into podcasts and Substacks for all the emails. Big thank you to the mods in the chat, including our latest new mod. And I hope everybody is doing well and hanging in there with this market. Yes, it's volatile. It's very volatile. And a big thank you to TNT Tesla, Shawnee, Cypher Sniper, K8, and everybody else. You guys rock. Thank you all for being here. We knew 2026 would be bumpy. It's getting bumpier a little earlier than expected. But the quicker things fall down, the quicker we recover. And be ready for that recovery. We'll see. Yes. And Switzerland, Slider the Rider. Yes, this is very cool. I'll share this because I lived there for a long time. Lucky Swiss, I am the bright spot in the EU for sure. Same with their currency and the way you're managed. So stay good, Switzerland. And that's what Europe needs. It needs to go back to being independent countries that all compete against each other like little tribes. Having one centralized government that doesn't look out for the people is not a good thing. Anyway, enough rant for now. See you all tomorrow.